All right, guys and gals, back to work, boy. Missed you guys the last couple days. Hope everyone had a fantastic, restful holiday weekend, but we can get back to work this week. We get some money to make in this brand new month of September. And I'll tell you, boy, we had a big clue in the charts right now, that big move down that we saw today. I'll tell you, anytime we see a big move like we saw this afternoon, there's always two types of trades, two types of setups I look for the following day. One of them is very simple, very common, and very easy to make money with. But I'll tell you though, if we're lucky, that second setup, the second scenario for tomorrow is not as common, but it can be a lot more lucrative. So two types of trades I'm watching for tomorrow. We'll cover all the details, of course, in this video tonight, the entries, the exits, and I'm gonna make sure everyone has a roadmap to make some money tomorrow as well. Before we dive in though and talk about my favorite trades for Wednesday morning, make sure you subscribe to our channel. You don't want to miss tomorrow night's video, so make sure you subscribe. And if you enjoy these videos, if you like these lessons, hit that like button, will you? And give me a shout out, give me a heck yeah down in the comment section below. Thank you so much for tuning in, supporting our channel. It feels to be back in the action here once again, the YouTube channel. Again, hope you guys had a fantastic, restful holiday break. Boy, charts are all ready to go. As you can see, NASDAQ triple Qs are all ready. The E-mini and the SPY is ready. I have two very important clues right now that are telling us where the winning trades are waiting for us tomorrow morning. One of those important clues is right here on these hourly charts, the 60-minute. We are bullish overall on the S&P and SPY, bullish overall on the NASDAQ and the triple Qs. We got this big juicy range right there on the S&P, range right there on the NASDAQ. So we're bullish into a range. Boy, this seems like a fantastic place to be a buyer. Ranges above us, act like magnets, overall bull market. One very big clue, one of two important clues right now is this bull move up into a range. This seems to be a really good spot right now to look to buy nice and low and run back up into that range up overhead. But you know what though? I have one more, almost even more important clue on some tick charts, some faster time frames, and we'll take a look at that in just a moment. That will help us put this all together and put together a game plan to make some money tomorrow morning. Before we do that though, let's check schedule for tomorrow because we do have a couple big news events on my radar and I want to make sure you're aware of these as well. First things first, the biggest news of the morning tomorrow morning is that JOLTS report at 10 o'clock Eastern time. Keep that on your radar. And if you trade tomorrow afternoon, that beige book at 2 o'clock Eastern time, that is our two news events we're watching. Now, of course, tomorrow we trade the morning session in our morning trade room, so we'll definitely want to keep an eye out around 10 o'clock Eastern time. Anytime we see news around 10 o'clock Eastern time, it'll be today, we always pay attention. But keep that JOLTS report on your radar tomorrow morning, and of course the beige book tomorrow afternoon. Those are two items on my radar for Wednesday. Back to our charts though, because it's good to know when the news is, but we know, hopefully you know by now, the money is made on the charts. I mentioned earlier that we're in a bull market overall here on the S&P and NASDAQ, that trading range up overhead. And one big clue is this seems to be like the perfect spot right now to be buying a nice steep pullback right now. But there's one more important clue, and to find that one, we got to go over to our tick charts. Now, we use tick charts a lot in our trade room because they make timing the entries so much easier. This, of course, is a 7,000 tick chart. You'll see all the time frames and all these charts in the upper left-hand corner. And if you're watching for the first time right now, welcome to the channel. This is the 21 EMA. It's pretty much the only indicator we use to find lots of winning trades each week, every morning in our trade room. There is one really, really big clue here, and big is the word of the day today on this one. Another big clue is that big move down. Now, think about this. We are bullish overall on the 60-minute time frame, but a big move down, going against that direction on the tick charts. Again, as I mentioned earlier, whenever I see this combination, bullish overall, big move against the bullish overall bias, there are two types of trades we look for the following day. One of them is very common, and we'll cover that one first here in this video because chances are high we're going to get that at some point tomorrow morning. But the second one, not as common, but I'll tell you, once you learn this, it might become your favorite because it can potentially be the most lucrative trade of the week. So let's talk about the first scenario, the first type of trade to look for here in a big move down against an overall bull bias, and that is a two-legged pullback. Two-legged pullback, a retest of that low, and a double bottom reversal off of that low. Now, there are ways to make money on this in lots of different ways here. I can buy during the pullback, I can sell the two-legged pullback, and I can buy that double bottom retest. So we're going to unpack this more here in a moment. But again, this is just one of the two trades I'm looking for tomorrow morning. We'll cover the second one a bit later on the NASDAQ. But first, though, let's talk about timing the entries on this, because a two-legged pullback is, I think everybody knows what a two-legged pullback is. When I say two-legged pullback, though, think about this sequence. During the pullback, because again, we're still bullish overall, right? We're not bearish overall right now. This big move down. Because of that, I'm going to look for what's called a bear trap pattern during that two-legged pullback. Bear trap will be a higher high in price, move right below that low. Now, when I say two-legged pullback, think about a measured move that goes a bit too far. So an A, B, C, D, a measured move that goes a bit too far. Now, you guys know me, right? I'm not going to pick a top on this. I don't know how far that pullback will go. It'll usually go to a measured move, a bit more than a measured move. What my plan is for tomorrow, though, is because I can't predict how far this thing will go higher, what I'll do is wait for the pullback to the 21 EMA, let the buyers commit on this a few times, and then use what I call a failure pattern to basically trap in the buyers and sell back down to retest the low. Now, very important, that failure pattern oftentimes as it goes lower produces what's called a bull trap pattern. Bull trap patterns are simple: lower low in price and a trap right above that high. Bull trap pattern the way lower. Now, once we take out that low, anybody who sold on the two-legged pullback, their profit targets are back around that low. This is a horrible spot to be a seller, not only in this situation, but because we're overall bullish on the 60-minute time frame. Anybody who sells here become buyers at that low. I'm not going to pick the bottom on that. I'm not going to blindly buy down there. We're going to use that same bears try once, that same bears try twice. We call these two try failures in our trade room. Trap in those sellers, squeeze those stops running higher. And then where's the market want to go? The market wants to go back and take out that high right now, right? So on the way up to it, we're looking for that same trap pattern. It'll be a higher high in price. It'll be a bear trap pattern as we go higher. So let's kind of recap this here real quickly, right? This is the sequence. One of the two patterns look for tomorrow with a big move going lower here. First one's a bear trap pattern, right? It's basically trapping the bears in once, twice, and using their stops to squeeze this thing going higher. Now, because of all that momentum going lower, it's going to want to pop up and retest of that low. So the bear trap gets us started. I always go like a half size position on these initial bear traps. Once we run higher, now to complete that two-legged pullback. Once I have that two-legged pullback, remember, we're not going to pick the top on this. It may keep going. And if it does keep going, I have a game plan for that here in just a moment. So stay tuned for more if it does keep going higher here. Odds say, the numbers say, we should see this roll back over and take out that low before we go back up into that range up overhead. I'm going to use that same failure pattern, one try for the bulls, two try for the bulls. That way I can trap in those buyers, use their stops to fuel that move going down, just like I teach in the free video course. And the key will be, before we go back and retest that low now, look for that bull trap pattern. It's a lower low in price. I move right above that little prior swing right there. Again, these are called trap patterns. This one, of course, is called a bull trap pattern. And then my favorite trade out of all of these is the double bottom reversal. These can oftentimes be the most lucrative trade of the week this week, because again, we're an overall bull market. Once we go back and retest the low, anybody who gets short right here, they're taking their profit at that low. It may keep going a bit lower. What I do know though is that bears once, bears twice. Once those rookies chase it lower, we have them trapped now. We can squeeze their stops running higher. And if we're lucky, we'll be able to add more to the position. Look for that bear trap pattern. It's a higher high in price and a move right below that low. Profit targets come off at the top of that range. And of course, leave that runner because again, we're an overall bull market on the 60-minute. So again, that is the first of two kind of pattern sequences I'm watching for tomorrow whenever I see a big move down against an overall bull market. Now, before we talk about that second scenario though, let's slow down for a second because I know that most of you guys and gals watching right now, you know these patterns. You're making money with traps and failures. You know why we love these double bottom reversals. But if you're watching for the first time right now, this might be a brand new strategy, a brand new language for you. Don't you worry. I teach the entire strategy, the entire roadmap, and I have hundreds of examples of bear traps, bull traps, reversal patterns, failure patterns. Guys, I teach this in so much more detail in our free video classes. I'll put a link up top for you. Don't you worry. Upper right-hand corner, grab that link that popped up right there and take that free trading course because the strategy I teach in that short video series will teach you a stupidly simple trick we use in our members trade room that tells us exactly where to find the winning trades you stay. More importantly, I want to help you start making money on your own. I'll teach you 4 my favorite entry patterns, failures, traps, strength trades. You'll know the whole entire roadmap. Guys, the markets are way too good right now. If you're missing the best trades you stay, if you've lost your confidence in your current strategy, hit that link that popped up top there, upper right-hand corner. Take the free course, learn the roadmap. It is perfect for anyone who is serious about making money in these great markets. And also be aware too, I'm going to put all the important links in the description of the YouTube video. Grab the free course links down there or join our trade room. We trade together every day, 8 o'clock Eastern time. I'll put trade room links in the description of the YouTube video. And don't forget too, if you're on Twitter or X, I post a lot of updates, videos, charts, mindset stuff. If you're on Twitter X, give me a follow. Again, all the important links you'll need in the description of that YouTube video. But that will give you an idea though, again, how to learn more about this strategy I'm talking about. A lot of examples inside that free video course. So now we know about that two-legged pullback, trap those bulls in, retest that low, and then boing, right back up with, again, one of my favorites is that double bottom retest. Now, let's talk about 2 variations of this, and then we'll go to the NASDAQ and talk about that second type of trade setup we're looking for tomorrow. I mentioned earlier, I want to get that two-legged pullback, but I can't pick the top up here, right? I'm not going to pick the top on this because it may keep on running higher, right? How do we do this if it does end up running higher? If it winds up running higher here, which could easily happen after a big move down like this, it could easily make a big move right back up again because it is an overall a bull market. If we begin to start grinding higher, this will be the giveaway that these bears, their time is done, right? So we'll oftentimes get that bear trap going higher, again, high in price, trap below low. We oftentimes will complete that two-legged pullback a bit more than a measured move. But now we don't get the pullback to the moving average. It doesn't pull back and try once, try twice, and gives a chance here now to short back down again. Instead, what happens is it begins to separate off the moving average and begins to grind going higher. Once it begins to separate and grind higher, kind of like how it separated and grind lower this morning. But if we start to separate off that moving average, we're not seeing very deep pullbacks. It's grinding higher. Okay, that's our sign now that for whatever reason, we're probably not going to get that retest of that low. This thing wants to go back up into those big ranges we mentioned earlier over on the hourly time frame. Now, the hardest part about these is not chasing after it. Because if you're anything like I am, when this thing starts grinding up like this, you're going to feel a pressure now to jump in and chase this thing going higher. You do not want to chase these going higher. What you do is find a new channel. Very simple. Draw a trend line off the highs, bring that trend line down around those big lows. Okay, that creates kind of a hidden channel, if you will. What I always do is look left and find some prior swings. Those prior swings are usually where the money lives, right? Now, In this situation, there are two types of entry patterns I look for. One is a bear trap pattern, which is very simple. It's a higher high in price and move right below a prior swing. Again, bear traps, you'll learn all about these inside that free video course I mentioned earlier. So trap patterns are great. My favorite, by the way. The next one will be a failure pattern, right? Failure patterns, if the bears come in and try to short on that pullback off the 21 EMA, I can now use their stops to fuel this thing going higher. Failures turn then into pullback combinations. Now watch closely here, because very, very important. In these scenarios, that initial spike leg, initial kind of pop up before it begins to grind higher, that pop up, that leg is the measuring leg. Why is it important? Because now I can take the size of that leg, I can pin it now at that low, and I can now tell kind of how far that thing wants to go. Okay, this is called pop and grind reversal, or pop and grind channel. Let me teach in the free video course, right? So it pops up, it grinds higher. We don't chase it. We wait to get that first pullback. We call this the first test is the best test, right? First test is the best test off of that channel low, right? So it could be a bear trap, it could be a failure pattern, a pullback combination, even a strength trade if we get the right signal tomorrow morning again. And again, once you get in the free video course, all these entry patterns, the entry techniques will all make a lot more sense when you go back and watch the video later on in this week here. So that is a variation of this that I'm watching for tomorrow. If it pops up, doesn't pull back, and we start grinding, going higher. One other variation I mentioned is if we don't get the two-legged pullback to set up perfectly. In other words, if we get a two-legged pullback, I mentioned earlier that I want to get this pullback right now and 1, 2 to trap in these buyers, right? And then run that thing back down again. Every once in a while, what happens is there are so many bears up here. We simply don't get that signal we want to get short on. What happens sometimes is we'll get one of these where it'll run lower once, like this, right? Like that. See, I don't want, even though this is one try, two try, I don't want to sell down here, because now think about this. My risk is here. My reward is there. See, you can't make a very good living long-term, at least, by taking trades with risk reward like this. What I want to do in these situations is I want to look for a trap entry. That way I'm not, well, basically that way I'm getting a better risk reward ratio. And trap entries, they always come above a prior swing. Now think about this scenario now. Think about this example, right? Here's buyers once, here's buyers twice. It's the same basic type of pattern, but now think about this now. Now, where's my risk? My risk is right here. Yeah, my reward is now right there. Do you see how that small change in the entry technique almost completely revamps this pattern and makes it so much more desirable? And the more desirable it is, right, the less risk required for that reward, the more other people will take it, the more smart money traders will take that, and the better off it'll work. So keep an eye out for that subtle variation, right? Again, it goes up 1, 2. Okay, now my risk reward is great, right? I can take trades like that. A lot of other professionals will take that trade as well. But if it runs up and slams back down again, yeah, we don't want to sell down here, right? Wait to get above these highs and finish off that move right there. Remember, the goal is to go up and retest that low and then bounce back up again. And we talked about some variations of this too, right? If it does kind of pop up and keep on going, we know how to trade this thing as well. That covers our first of 2 scenarios for tomorrow, and a couple of variations that we want to make sure you guys are aware of. That way everybody has a roadmap to make some money on this. Now let's go to the NASDAQ now. NASDAQ, I mentioned earlier, right? We're pretty clearly, we're bullish overall, right? No doubt about that. Into a trading range, and you'll notice the amount above the range, the amount below the range. I mean, we're right into an area where this seems to be a great spot to be a buyer. The challenge, though, is all of that momentum that we saw going lower. Over in our tick charts here right now, you'll notice that's a 4,000 tick chart in the upper left-hand corner to get in the same 21 EMA. Anytime I see a big move like this, right? Anytime we see a big move like this, there are 2 types of situations we want to plan for the following day. One of them is that same 2-legged pullback trap those buyers in, retest that low, and then double bottom reversal back up again. The same setup we talked about before on the S&P can be applied here on the NASDAQ. The next thing to look for is a trading range. Not as common as a two-legged pullback in these situations, but let's think about a trading range, because I mentioned earlier, if we see a range down here, this could really end up being the most lucrative trade for tomorrow. Now, ranges. The most important thing you want to learn about ranges is that ranges act like magnets and they love to rotate. Now, I'm not sure if this can be the range for tomorrow, but let's say, for example, though, this becomes the range that we get for tomorrow and we begin going sideways here overnight. One thing about ranges is they love to rotate, and the amount that we go below the range can project now above the range, right? So imagine now we start rotating back and forth here inside of a trading range. I mentioned earlier that I want to get that two-legged pullback. Here comes that two-legged pullback idea once again. But the most important thing now is to think about how far underneath that range have we gone. Now project that now above that range. That creates an area of resistance. And what I'll do is look left, find some of these prior swings, make those as areas of resistance. Now, as we pull back now, remember, I don't know how far this will go. This may keep on going, and the game plan I gave you guys earlier on the S&P is certainly in play if that happens. What I'd like to do, though, is once this thing pulls back to 21 EMA, now look for those 1, 2, and that same idea, right? That failure and run back down again. Now, a bit different, though, on a range play. On a range play, we really lean on the amount above, the amount below. Now, where the fun really happens is down around these lows here. The amount above the range, the amount below the range. And again, we're not going to pick the bottoms here, right? We don't pick tops and bottoms. That's a rookie mistake, right? We know better than that already. Hopefully we do now. As we go lower, I don't know how far that price will go. What I do know, though, is once those bears come back in, once, right, twice, now I got you, right? Now I can trap those bears in and use that same failure into, what was it again? That bear trap combination. So you'll notice a lot of this is very similar to what we talked about earlier on the S&P, right? The difference, though, is on a range market, we really focus on trading that rotation back and forth. The amount the below gets predicted above. That creates our key area. We don't pick the top on this, right? We then trap those buyers in, that same failure pattern we talked about earlier. And the goal, of course, is not only to go back to retest that low, but it's also to go out and take out the rest of this pendulum swing. That becomes a good target. Once you complete the pendulum swing, now trap those bears in again, right? Let them try it in here. This is a horrible spot to be a seller. Great spot to be a buyer. I just can't pick the bottom on this because it may keep going a bit further than I think it will, right? So no, don't pick the bottom on it. Let those bears try twice. Why twice? Because then I know their stops are right there, right? Now their stops are sitting right there. I can squeeze those stops. If you're caught short and you get stopped out, you're buying your way out, right? This is an area where buyers can get in pretty easily at that low. And again, that failure pattern, then look for that bear trap pattern, that higher high in price, a trap below that low. And again, I realize this might be brand new to you, so make sure you grab the free video course and learn these entry setups. And remember, leave that runner, how far? How far? The amount below, right? The amount below, the amount above. And remember too, it's an overall bull market, right? So profit targets come off at the pendulum swings, but if I can tomorrow, right, I'm going to leave a little piece of this to run because it may run pretty well for us because we're still overall bullish on the 60-minute time frame. One last thing you want to be aware of here. One kind of last thing here is that kind of one head fake we get a lot in these situations is we oftentimes will go sideways here, overnight or early tomorrow morning. And what happens is we get this strong run going lower. All right. If all I get is a strong run going lower, again, not going up first and then back down. Okay, a little bit different here. If all we get is a strong run going lower, I'm going to use a slight variation here called a bear trap pattern. We talked about this earlier on the S&P. The aggressive way to do it is bears once, bears twice, right, back up again. With this scenario, though, they may hold the underbelly and keep on going, right? There's no way to know this is the bottom of that big move. So if we do see a range here, I'm going to look to get that pendulum swing back up again. And to get into that entry pattern, or to get the entry, I'm going to look for that bear trap, right? The bear trap, again, is bears once, bears twice, getting in underneath a prior swing, right? Really it's a bear trap into a bear trap pattern ultimately, right? Bunch of higher highs and move right below that low. Now, where things get interesting on this one is that now these create what is often, what I call oftentimes a slingshot reversal. Remember, ranges love to rotate. We're an overall bull market. So as this thing rotates off that low, this oftentimes has quite a bit of strength to it. So these will oftentimes turn into, if you recall earlier this morning, we talked about that grinding motion. These oftentimes will begin to grind going higher like that, right? We've now busted through the pendulum swing, right? And we're grinding going higher here. Again, a fake out, break it off that low, rotation off the low, right? Again, overall bull market, a lot of strength now going higher. This thing may separate and never pull back to that moving average. What do? Do you chase after it up here? No, you certainly do not chase after this. You mark that trend line off the highs, you bring it down off that low. What do? We look left, find some of these prior swings. I want to get that first test off the low of that channel. Again, first test is the best test. This could be a bear trap, like I was showing you here. It could be a seller failure pattern, like I mentioned earlier on in this video. Any of the entry patterns you guys are learning in the free video course can be applied off the low of that new channel. So again, if we go up first, we know the game plan back down again. If you go down first, it's a lot more aggressive entry going long. So it's a bear trap entry into basically back-to-back bear traps as we go lower, because it's always a trap as it rotates off that low. And the question will be, do we go up 1, 2, back down again, right? Or do we go up and begin grinding higher into that kind of slingshot reversal, right? That pop and grind going higher here. All right, guys, that's the game plan for tomorrow. I'm getting pretty excited right now just thinking about this, and I love being back in the rhythm here once again. Back, summer break is over with. We can all get back to seriousness here and make some money here in the month of September. But again, that's the game plan for tomorrow. Now, don't forget, tomorrow morning, 8 o'clock Eastern time, guys, the best way to start making consistent money in these markets, come out and learn this stuff and trade with me every morning in our trade room. I'll put all the important links tonight. The free class links will be there. Start first on the free video course. If you get any questions, any trouble getting access to the free video classes, call the office or use live chat, or let me know there in the comment section below. But hopefully you learned a bunch in this video tonight. Hope you use this knowledge to earn a bunch tomorrow. And hopefully I'll see you sometime soon trading with us, 8 o'clock Eastern time in the morning trade room, all members here at SOT. In the meantime, be well, be nice to each other out there, and you better be here next time. Adios, amigos. Bye for now.